you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in. And we'll do the same without wasting a second more of your time. Let's go right into the charts. Here we go. Bada bing, bada boom, we go. And it's only been about 10 hours since we last streamed, but it feels like a minute ago. I hope you missed me. I missed you. As we go into the charts, nothing really happened. We just consolidated and attracted more liquidity in as an inducement. But to recap, in case you missed the Asian session, we did drop out of this diagonal fib 0.5 level of the upwards projected path, and that means are we slated to hit this 382 region, which also coincides with the nice juicy 41 days of long liquidity just chilling there waiting to be grabbed at 150 billion plus dollars, just chilling there down at 25.2 for that divergence play of the extended W to the upside. Perhaps looks like we got a rising wedge potential breakdown. We'll see about that. Is this an ABC down to that region? We went over that earlier today. Let's go into the liquidity. What is this heat map from high block? Well, it's when people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss, and we get to see who those crispy characters are. So let's go see who's getting crispy today. So as we saw before this $218 million character was on the table still, I believe. No, they bounced off the liquidity earlier today, that's right. And we are going over the potential of coming down to the 50x pool down here at 26,129, and we did mark off the other pools up above, but we'll do that again for you just to keep you in the loop. So we have this 218 million down here at 50x. Here we have seen some enticement of some longs here, 40 million to the 17 million in shorts. So the shorts are in less appeal than the longs, and they came up to the previous characters we saw earlier today, which were up here. There was 45 million induced up here at the 100x, and as opposed to the 26 million. So they came up and grabbed that 45 million off the table, and his partner in crime up here at 35 million. So as you see, they come back to these little pools, and it looks like these small baby pools are just in this consolidation path of just gobbling up 100x, swatting them off like gnats left and right.
Fatality.
Yes, they all get gobbled up in the end if you don't pay yourself. So that's why you should always think about moving your stop into profit like Captain America's shield. So as we look into this pool above, as we talked about earlier today, the rounded bottoms are these little pool traps that they try to lay, and it looks like you have that 207 million at 26,579, and then you have another 207 million at 26,855, and that is stacked up quite nicely by the looks of these noodles over to the right side here. I like this region for being taken back, at least for that liquidity grab to the upside. So we will see something occur by Run for Profit Friday in about 2 hours from now as London hands off the baton to New York. I heard it's going to be a short day today, as in the markets will close early and there is a bank holiday on Monday. So the trading day will be shorter than normal. So what does that mean for the liquidity grabs that they will take? Are they going to surge up to take the shorts? It is the end of the month. Options expiration should have expired yesterday. We'll go into that later, and you see this pool of 100x up here at 108 million at 27 even. So let's expand our vision to the upside as we get this bump and tune in route. So on the 7-day time frame, we already ascertained that the imbalance to the upside at 27.8 is a likely target on this time frame. And then as we expand our vision to the monthly time frame, we start to juxtapose the pools above on the monthly time frame, and we also see that imbalance occur with the 40 plus billion dollars up at 27.8 as a juicy ripe target on this monthly time frame. However, it starts to shift to the downside on the 3-month time frame, which we've been talking about with these $150 billion characters at 25.6, 25.4, 25.2. There's a large pool down there. So do they go up to go down to grab these characters over the weekend? I could see a bleed out over the weekend, who knows, but we could see that run for profit on Friday to the upside to just stop them out on before they make that run over the weekend, or they could just make a run for it. There is no guarantees in trading. We're just juxtaposing as we go. And 22.5, there's that $100 billion down here. If we do take this, are we going to see the slow bleed out down to this region? That could be the case on this time frame, although you are starting to build a path of double digits to the upside, to be weary of that being a gravitational point as well. And then when you start to expand your vision to the yearly time frame, that's when you start to see everything turn to a cool aquamarine color, as everything at 100 billion is now cool aquamarine. And then you see this starting to get a little bit thicker up at 32.4 with 132 billion up there, looking juicy for the taking at some point in time. When will that point occur? It's starting to get more yellow up there than it is down here, although you do have a good $123 billion down at 22 even. So do you see this get gobbled up first? It looks pretty even Steven on the yearly time frame. So are they biding time for some sort of news play or some sort of bank failure, similar to the Silicon Bank failure here, which had everyone bearish, and they surged up and grabbed that $178 billion without hesitation at 25.6. So yeah, that's about the liquidity in a nutshell. We already went over some things on the earlier session, which we will spare you the trouble, but we will do a time capsule event. Let's go back in time and experience something from a blast from the past, will you? Let's go back a year in time and juxtapose how the month of May has been this year compared to last year, shall we? So May, let's just go back to the start of May, all right? We'll just make that May 1st. So May 1st started here on this year at the 236 break, and we bounced down and bounced off the 618 and came up here and did the triple top, the 3 hits to the high, the power of 3s as we made our way down to the downside. And it's been pretty much a 1, 2, 3, 4, 5, 6, 7, 8 days of straight downside before retracing a little bit and consolidating within the 7861 region before making a sharp drop below and hesitating for a moment in time beneath the 1 region here at 26.6. What percent is this within the month of May? This is a cool 13% retracement. Let's just go back a year in time and juxtapose what happened last May with the Luna collapse and everything going on back then. If you recall, back in March, we had the April Fool's fake out, a lot of stochastics reset and looked right for the picking. You had your bull flags drawn, and it was a straight Bart Simpson to the downside, and it was 30 days of straight downside, basically for the whole month of April. And so we started out May at the bottom of the range here. And I think this was when the lunacy episode of Luna went insane and collapsed. And this was when everything kind of went haywire. So we had March 1st through basically the 31st. So we had here we go. So we basically had this retrace down about 36%, which when zoomed out doesn't look like much, but the number tells it all. That was a pretty steep retracement to the downside with the first few weeks being this sharp thing. And then we talked about the recovery of the wick, and they recovered that wick with fury to the downside here. And this is why we have these yellow dotted lines. These are a lot of points of contact for support and resistance. So this is why we consolidated here for a long time in June and then making that drop down. So this is where we have come back to a year later, and we've started to play around with this resistance and the idea of trying to SR flip these zones a year later, and with that failure out and rejection out to recoup some energy to try to make a stab to this region again in the future. But it's been a pretty minor retrace by comparison, don't you think? 13% is not much. So even if we were to come down to this region of 15%, that's a pretty interesting retrace idea as compared to last year's 36% retrace and consolidation. So this retrace of 15% and kind of meandering around here, even if you were to surge up in a similar fashion, let's say where you come up like this, came up to here, right, and then consolidated and broke down. Like if you were to break down, even if you went up to here, like you'd probably only come down to these 23K regions. It doesn't have that same bearish vibe is the basic moral of the story I'm trying to appeal to here. Is this was a much more dramatic, violent, disruptive thing to the downside here than this was. It's been pretty boring, actually. I must say, I'd like to basically about 14 days we've been going sideways here. So I would like to see some sort of either rip it to this region at 1382 or rip it out of the region back up to some liquidity grab, but give us something. It's been that's what Bitcoin likes to do, is bore you to death before a big move is inbound. So let's go into our Binance chart and throw on our oscillators and see what's different from 12 hours ago, and we will see that occur as we start our descent through the time frames. Nothing basically changed. We'll just give you a recap of where we put it. Based off the liquidity, I think we are on the hourly time frame, so we'll throw on our heads up display. By the way, hit the like button if you have not yet already, and consider subscribing if you like what you see. This indicator, what is it? It's momentummaster.info, link in the description for more. You can scroll down to the features menu and toggle each thing at your leisure and see what it looks like in its full glory by toggling these toggle switches. Or you can look at the individual components and read about them at your leisure. So as we saw here, we were talking about the shift of the cloud and the thinning, and back before it even thinned, we were telling you that that thinning would most likely occur in this region and looking for that kiss off the cloud idea. We have not yet gotten the kiss yet, but the cloud has shifted blue, as it does when it starts to make a play to the upside. So we were not sure what the future would entail, but we were looking for that hourly reset, and we had the cross down event on the hourly, which is starting to surprisingly hold as we get overbought on the 4 hour. So the 4 hour time frame, it looks like it's trying to stave off the hourly dump here. However, you have the cross up on the 4 hour time frame, which we were talking about contending with, but you're getting overbought without really going a single inch. So does that mean you're going to see a rejection at the cloud and continue down? That's what we'll find out. Let's delete these synopsis from before, because we can always draw it again as we start to go into the time frames. So let's go into the time frames of the, starting at the daily once more. So we're going to give it a little bit more thorough juice to the daily time frame. Let me delete this real quick. We already got that curve. So what you want to do for the determination of whether this is going to be a bullish objective candle or not, a hammer or not, you do a retracement in the direction it moved, which in this case is up, and you close it at the wick. And if the body of the candle falls within the 382, then you are objectively bullish on that time frame. So let's go ahead and make sure this wick is accurate there. And so we're falling just a bit shy of being a bull hammer, so I would not consider this a bull hammer under objective terms here. Let me make sure that the wick is properly aligned here. Yep, you're not in line with the 382 just yet. So in the similar fashion, we had that daily on this region too. And so we measured that and found that it was within the 382. So that's why we got a little bit of a surge to the upside. So this candle is not necessarily a bull hammer by objective standards. The one thing we have in our favor for this is the cross up, which is still holding. The fat boy was attempting to reclaim the thin boy here. We do have 11 hours for this to occur. This could be a one big wick before it goes up. Who knows what the future may hold. And yeah, that's one thing that's good about the daily time frame, is it has also reset to 23, so it could curve at some time, but we already went over how the money flow is above the RSI here, but you are getting the Williams in a green oversold state. So are you going to start seeing this curvature before you come out of this region? We did this before on a Friday, and a Friday we broke down, and then Saturday and the weekend and leading up into the next week we surged out of there. Are we going to see something similar, like a weekend leading into the weekend to get out? Most likely the weekends are not known for pumping. I've seen a lot of dumps over the weekend, but not so many pumps. But it could be they're trying to escape the liquidity to the upside, and they're trying to avoid paying over leveraged people. So it could coincide with the banks being closed, and they do some weird play outside of the banking system to surge it. Who knows? So the holiday coming up on Monday for the banks in America is something to take into account as we enter the weekend, and today, as the day I've been told is going to be shorter. We did talk about how this thinning cloud is going to possibly indicate a shift in narrative structure. So when you see this curvature in this manner, it's something to note. And we've done this before on many time frames, how you have this curvature, and this kind of indicates a preemptive move to another direction. We saw this curve as it was curving and it brought to the downside. So are we seeing this curve as it's curving to potentially bring us to the upside? It's just something interesting that occurs over and over again. So when you start to see this fatigue here, and then we're hitting up against this cloud and failing, and it's curving in such a manner, it indicates you could possibly break down at it. And in similar fashion, if you're curving in this manner and you're not going down any further, are you fatiguing for that move play to the upside? If you're not already in a short, basically I wouldn't be entering one. Me personally, I would be waiting for a long entry and looking for that divergence play somewhere down below, or taking your stab with a stop loss, a reasonable stop loss at any point in the journey. But of course not financial advice, all paper trading in all that fun stuff, legal jargon. And if you look at 22-hour time frame, we do see that we are crossed down, although this does like to fake out in similar fashion we did at the beginning of May here. So you could get this fake out to just curve up at any moment in time, although as it stands currently, the baselines are not in your favor on the Treasury 22 time frame. But you're getting this curvature in the same manner like this. So does that imply a upside play? As it stands currently, the curvature does suggest that on the 22-hour time frame. We did see that hard rejection there because it was still thick, but it's starting to thin ever so slightly here too. So that is an interesting thing to note. We recovered some of this wick here. We didn't recover all of it per se, but we did come mighty close to recovering all of it. And the 22-hour time frame is also reset, although meandering and ambiguous, and the money flow is above the RSI here, so not your ideal entry just yet. And if we look at the 12-hour time frame, we are starting to see that curvature as it tries to negate this cross down that occurred on this red vector candle that broke it to the downside. The cross down on the MACD is still intact, so you're not in a bullish sentiment just yet in the leading way, shape or form, but you're also seeing this curvature on the 12-hour cloud as well. The one thing we pointed out the other day was on this curvature of the 6-hour that threw this anomaly curveball, and we saw this kind of curvature thin with it back to purple and went blue purple, and we're like, we haven't seen that, and we tried to look for times where it shifted back to the other color almost immediately and couldn't find it. And so that was something to note for the future reference. If it does surge up, that is kind of your fake out potential to a downside continuation play, a kind of cat ears scenario, if you will. So are you starting to see this curvature on the 6-hour just yet? I'm not sure about that, but it is slightly tapering and in its angle to this direction. So are you going to see that 6-hour play? You are reclaiming some of the baselines here. They're getting poised to cross up here. What are the baselines? We'll go to the Momentum Master A settings and look at what they are. They're your first sign of reversal. They normally come before the storm, the calm before the storm, if you will, the entry before the surge or dump. So if you look at that crossover event, it will lead you to the promised land most times, more often than not. So it looks like the 6-hour is attempting to play out in conjunction with the 12, 22, and perhaps the daily if we see this. But this is where the 4-hour kind of gets its legs from. That's why I look at the 6-hour in conjunction with the 4, because the 4, when the 4 gets pinned as it did in this manner, most times you have the 6-hour still leading you to the upside path. So if this gets overbought, it's not immediately enter the short, it's see what the 6-hour is doing as well. You are getting the cross up on the leading MACD and the cross up on the baselines here, as long as you can maintain and close a candle. So it doesn't matter what kind of wickage goes down here, if you close the candle above the baselines, the play is possibly still on. We have the money flow beneath the RSI, although the RSI seems to be coming to the money flow, not the money flow going to the RSI. And you're getting that sleepy rising sun, which is like a cloudy day. It's not as surging angle as this was. So are you going to see more downside here on the hourly reset? So the hourly reset took us about 12 hours to reset, and we didn't really reset fully. We only came down to the 50 level from basically this time of 86 down to 50. And we brought the money flow down beneath the RSI. It looks like it's getting your KISS idea. You're getting some vector candle volume here on the hourly. We're seeing this red vector occur on the hourly. What is a vector candle? Well, you can look into PVSRA at your own time. It's basically a combination of all the previous 10 candles of volume, 200% of that volume in a single candle, just notifying you of significant volume. And that's when you see these red, it's more significant than the previous red. So these are significant volume. You can change the size of these candles on Momentum Master B if you like them to be more prominent. That's possible too. And yeah, we're looking at this down. Let's see which characters they're aiming at on the liquidity, shall we? Shout out to everyone here. What's up, Ireland? Prehab, how you doing? Oh yeah. I make it so if I put my headphones on, I can just ever so slightly hear my voice, so it's not overpowering and delayed. So if we look here, it looks like there's 74 million in shorts entering off of that drop just now, as opposed to 56 million in longs. So there's a slight imbalance in the short liquidity opening up here. But this 56 million in longs could maybe is not aware of their partner in crime over here at 218 million at 26,129. So they might have wanted to wait on opening that long because they might be coming for their partner first and then jump off of them to these pools above. So the patience is rewarded in turn. So are they coming to this 26,129 character first? That is an awfully a large amount of money to leave there as they surge up. So are they going to build these pools in the rounded bottom fashion we talked about this morning? This is your cloud kiss idea. If you come down to here and close the hourly candle, 17 minutes will be your time frame for that close. We're going to not remain exactly until 10 because I have to get into the mindset for trading futures of NAS. Also links for the coupon codes for that in the description. If you're interested, you can find out how to get funded trading stocks and stuff for a relatively cheap price. I think they're doing a sale now for $14.95 for one evaluation. Very, very cheap. So yeah, if you look at this, it's starting to shift in the upwards manner here, and you get that cloud kiss at some point. They're going to induce some more of this liquidity on both sides to ping it, and then probably send it in about an hour and a half at the baton pass to London, when a lot of streamers like to stream and claim it's their doing. So we will see how that plays out by then on the sidelines. Hopefully you can catch a nice play off of that in either direction. So as it stands right now, the hourly is at an ambiguous point, but it could come and get that cloud kiss bounce to the upside here. You got a rounded bottom with a continuation idea in mind. We already laid that out to the pools at 26,849, and you got these shifting cloud angles alluding to some sort of narrative push up at some stage. When does that stage occur? It's your guess versus my guess. I'm not sure, but I think that there is something inbound at some stage soon. If we don't bounce off the liquidity here and create a divergence to the upside, we will see. Hopefully there is some movement and not more consolidation for another week or two, because it's boring as heck. So if we look at the 15-minute here, the 15-minute is maintaining its cloud, although it's getting purple and blue because it has a lot of other time frames to contend with here, but the upside path could be in order. We are bouncing and trying to reclaim this weighted moving average, and the adaptive seems to coincide nicely with the pool we have above. So this is the thing, even if you don't have high block, if you will, if you don't have this, and to be able to ping the liquidity points, these adaptive moving averages within the Momentum Master suite should keep you up to date without having the need for a guru to tell you what to do. That's what one of the mottos I was trying to think of for this indicator was be your own guru, because it's not really like, if you know how to read these things, it's kind of got your dynamic resistance and support built in, resistance support, so you can kind of gauge where the trends begin and where they end and whether they maintain themselves, hopefully on your own. So yeah, so we're looking to see how this candle closes. You're getting a lot of selling pressure here, as the PVSR strategy states, and you're getting this cross down event on the Williams. You're starting to see this potentially play out in a reset fashion. I would look to see how this candle closes with the cross down event intact here, and how it bleeds down into these pools below for this. So we're going to outline the pools and then just bid you adieu on that note. So you're going to see how this hourly resets and maintains a region with this cloud kiss in mind, and then you see how many of these pools it will come to take. So you have the character down at 26,129. We already laid that out in the charts here. On this dotted line, if they come off this guy and bounce off the bottom of this Keltner channel and start to see this wick coming up to close on a cloud on one of the candles, then you can guess that the play could be to these pools up above. As it stands right now on the minute time frame, you have about 7.5 billion in short liquidity imbalance here, and you're creating that rounded out bottom idea. And we already talked about the stacked pools up above at 2713, 2737, and yeah, the 27333 region seems to be the end of this stacked liquidity range before it starts to taper. So 27.3 is about a good idea to look for a potential fatigue. 27.3, if it ever gets up to that region, yeah, it could potentially fatigue out there. So I'm looking for that potential cloud kiss that we talked about before at some stage here. Is this going to be it, or are we going to go a little bit lower? I suggest that we go a little bit lower to take out that pool down here, maybe wick off that and go to the upside. Could be the play for this evening. We could go into, let's put when that will be, 12 o'clock, 1-ish maybe, and lead into 10 morning time. Candle close can be strong with the 22, and then they'll leave it ambiguous over the weekend or something, and just have basically gone sideways from here. All right, ladies and gents, that's my story, and I'm sticking to it. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, bringing the fire, the accuracy, the precision, and all that fun stuff, and we'll catch you on the flip side.